Hi everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. And we're the nation's largest precious metals dealer, and for over a decade, we've been helping Americans like you and I to protect their retirement savings with physical, tangible gold and silver. And we're really glad to be here today to talk about gold, silver, and the economy. I'm sure that you all have some concerns about where the markets and the dollar are headed, which is why you're here in the first place. And so we're going to discuss what's going on in the overall economy, how you can invest into precious metals, why you should, and of course, we'll help you get to know our company and why American Hartford Gold is certainly the best choice for helping you protect your investments. Now, I want to give everybody a chance to kind of get in and settle down, let a few more people join the stream here. So while we wait, what I'd love from you is to write a comment, let me know where you're watching from, and whether you've bought gold before or if this is your first time, and also whether or not you've joined us on a webinar previously. And then you can also just let me know what brings you here today. Is there something that you're seeing in the economy specifically that has you looking into precious metals that you want me to address? And is there something that you're joining for and hoping to learn? So it'd be great to hear from you. As we go forward, just feel free to write down any comments or questions that you have, and we'll try to address those as we go forward, but certainly want to hear where you're from and why you're joining us today. Have Dwayne, Andy from California, Jay Marvin present. Good to have you guys. Great to just have you joining us, and certainly want to dig into all the information that's going to help you get a little bit more confident with why gold and silver and how that process works. We've got Bob from Florida, Judith, Dorsa from Georgia, first time. Good to have you, Dorsa. And then Don from Arizona. All right, so again, as we kind of get settled here, I'm Machi Block, Senior Director at American Hartford Gold. And my job here is to help people like you and me to gain an understanding of, to invest into gold and silver and precious metals. And today I'm really excited to just take you through the essentials of owning physical precious metals and why they really are such a crucial cornerstone of any well-built portfolio, especially in this current environment that we're going through. It's no surprise that this year has been kind of a crapshoot. There's all sorts of unknowns and uncertainties. Every month seems to bring something new. And so as we get into it, I would imagine that's why you're joining us, is concerns about the economy, wondering where we're headed, and just trying to make sense of all of that. In our opinion, it's never been more important than right now to understand how gold and silver can really serve as your financial safety net. So whether you're really a seasoned investor or whether this is your first time and you're just beginning your journey, our goal today is really to provide you with clear, actionable insights on how to secure your investments with gold and silver, and then of course, again, why you should as well. So when it comes to finances and investing, we're well aware that it can be very confusing, and many clients are unsure about how to proceed with their life savings. That's a big deal. And that's why we're doing these webinars, is really to provide you with some much needed clarity when there's so much confusion and again, uncertainty in those markets. So at any point in time, as we go through this webinar, if you want to chat directly with our account executives, call the number that would be in the chat. It's 866-607-2447, and you can have a more in-depth, specific conversation. We do have plenty of account executives on standby, ready to take your call, ready to help and get into your specifics. And then also leave your questions on the message board. I do have moderators that are helping me filter some questions and feed me those periodically. So I'll stop and address that as we go forward. And then also, if you have a really specific question that you're putting in the chat, one of our moderators may pull you into a side chat just to answer that question more one-on-one. And keep in mind that anything that you write is helpful for us, just to know how to tailor these in the future, so that if you do have a question, ask that question, even if you think that I'm going to cover it. It just gives us a sense of what's important to you. It's why we're all here. Also, what's really important is that I mentioned this is not financial advice, right? You have to make your own decisions. My job is to try and paint the picture of what's going on in the economy, help you make sense of gold and silver, get an idea of why it's important to own it, but ultimately that decision is up to you. So that's where we're starting. We also have Shan, Sebi, Robert, and Diana, by Vitali, Sebi, Carl, Amy. So yeah, glad to have you all on here today. And what we're going to talk about is just the economy overall. That's where we're starting today. So the dollar, if you've been paying attention, had the worst 6 months in 52 years, since 1973. It's down 11% so far this year. And really everything that we do revolves around the dollar. Our investments, whether it be in stocks, bonds, real estate, everything that we own revolves around the health of the dollar, not to mention the overall state of the US economy. So the dollar is down 11% so far this year. And I want you to think about that for a minute. Your dollars have lost 11% of their purchasing power so far this year, and much further downside looks like it's coming. The whole world seems to be pulling back away from the US dollar as that world reserve currency that we've known for so long. Central banks and foreign investors have been dumping US treasuries this year, and since 1971, when Nixon took us off the gold standard, the dollar has lost 97% of its purchasing power. And so here's a visualization exercise for you to just drive this home, because I know this really makes it real to me. Think back to the 1970s, or if you're a little younger, think back to the 1980s, and imagine what $100,000 could buy you at that point in time. And then I want you to think about what that same purchasing power looks like today. What can $100,000 buy you today versus back in the 1970s or 80s? And it's drastically different. And that's what's happening to our dollar every day, every year, is that purchasing power is just eroding away. We call that inflation. So we're dealing with a very real problem with the dollar. UBS, obviously one of the most prestigious investment banks out there, wrote a memo to their clients earlier this year, and they called the dollar unattractive. They said there's further declines expected as the economy slows down. And in fact, 16% of central banks have decreased their holdings in the US dollar this year. In 2024, it was only 11%. So they're kind of expanding the amount of banks that are dumping dollars right now. And it's worth noting that the US dollar is actually the only currency that central banks are looking to reduce their exposure to. That says a lot. And so what is the future of the dollar? Whether that be in the short term, just in the next couple of years, or what's the future of the dollar in the long term if this trend continues? And I think we're facing a real existential crisis with the dollar right now. Now, additionally, let's drive this home. The US government has $37 trillion of debt. Moody's, which is the largest credit rating agency, has downgraded US debt. We lost our last AAA rating earlier this year for the bond market. And what that means is that investments in bonds that were once considered the safest investment in the world, for those in the US and across the globe, they would put their money into the US bond market because it was the safe haven place to be. That now has inherent risk built in. And the world is taking noticing to that. So financing on that debt that we hold, that $37 trillion, that's now our single largest line item on the US budget. It's about 9% of what the government earns. And that debt financing is expected to grow to about 30% of our budget in 10 years. So that's unsustainable. That's a death spiral. It's a doom loop that Jamie Dimon and Ray Dalio and Elon Musk have really been warning about. This is really an inescapable collapse of the US dollar as we get further into debt, and it costs us more and more and more to finance and service that debt and just pay the interest on that debt that we're holding. The government has to go into deeper debt to do that. The world walks away from that debt, no longer wanting to hold it because that risk goes up. So how do we continue to finance it? And that's really what we're on the precipice of right now. It's a huge crisis that's really impending, and you're getting warnings from the top people in Wall Street, the top investment banks, really the brightest minds in finance are warning about what we're walking into right now, this inescapable collapse of the US dollar and the US system. So that's why we need gold. It's inversely related to the dollar. As the dollar goes down and loses purchasing power, gold goes up in value, so does silver. And if we've taken notice, Trump has been pushing the Federal Reserve to cut rates this year because we're paying too much interest on that debt. So he's been hounding Jerome Powell, cut rates, cut rates, cut rates. It's bad for the economy. It's bad for the US system. But up until this point, Jerome Powell has been really fending that off, saying it's too early to cut rates. We're going to have an inflation crisis on our hand if we do that. But we have $9 trillion in government debt that has to get refinanced next year in 2026. That $9 trillion getting refinanced at the current interest rates would basically bankrupt the country. It's being refinanced at about double the rate that it went in at. So that just jumps our interest payments on that debt to really astronomical levels. And that's part of the reason that Fed and Trump are kind of going at it with each other here. So we have to issue new debt, of course, to raise money to meet that obligation. And the world is pulling back away from our treasuries. And we saw this back in April when the bond market started crashing. And what this means is that we've got to issue higher and higher interest payments on the debt that we're issuing in order to entice investors to take on that risk. But the higher interest rates that we're issuing means that those bonds cost us more and more again to service that debt. So this is just this unending cycle that we're finding ourselves in right now. And foreign investors and central banks have lost their appetite widely for US dollars. We've eroded that investor confidence. And what, again, does the future hold as we continue to go down this path? And this is the crisis, again, that Ray Dalio and Jamie Dimon, two of the most respected men in Wall Street, are warning us about. Ray Dalio says, if you think it's bad now or looking bad now, wait until the US can't find anyone to buy their debt. And this is a currency crisis that's unavoidable. It's a breaking of the US bond market, which is the lifeblood of any economy. Now, think about 2008 on steroids. This is the warning that we're getting from the brightest minds here. And Jamie Dimon, again, was in a room with bank regulators earlier this year, kind of talking about this coming crisis. And he said the bond market is going to crash. It's going to happen, and you're all going to panic. And he said that we as a bank are taking precautions. We're bracing for it. It's time that the American investor does the same. And in fact, JP Morgan has come out numerous times telling investors to buy precious metals. So I think that's a note worth paying attention to. And then keep in mind that while the dollar has already fallen 11% so far this year, Trump both wants and needs a weaker dollar, right? He's trying to turn the U.S. into a manufacturing and an exporting nation. And if we're going to be exporting, we need a weak dollar to compete. So far this year, the Fed again has been pushing back, saying that if they lower rates right now too soon, then inflation is going to get out of control. And if you're aware, the Fed has kept rates very high for quite some time because inflation was such a problem. We already see inflation going back up. So if the Fed cuts rates, it means that they're making more dollars flow into the system, which means that inflation goes back up. So as of yesterday, the Fed actually cut rates for the first time again. They cut it down 25 basis points. The problem with that is inflation is already at 2.9%, and it's expected to climb again in 2026. So the Fed is signaling that there will be more rate cuts coming up. But here's the thing, is the only reason the Fed would cut rates is if they saw a recession on the horizon. And some of the issues that we're finding right now is the labor market has been weakening and it's pushing us towards that recession. So the Fed cuts rates to make money flow into the system to stimulate job growth and GDP. But again, they're battling inflation, which means further erosion of our dollar. So this is really the rock and the hard place that we're between. Again, the labor market has been weakening. It's pushing us towards that recession. There was 1 million fewer jobs created than what was previously reported. If you caught that earlier this month, the Fed came out with a revision to the job market, and they actually pulled 1 million jobs out of what they had previously reported. And they're showing that overall, the steady trend over the last 2 years has been fewer and fewer jobs that have been created, that there's a rising unemployment. And Jerome Powell signaled that the jobs creation level has actually fallen below that sustainable level that will keep unemployment low. So essentially, just to put that in layman's terms, less jobs creates recession, means the Fed has to keep cutting rates to stimulate the economy, which means that inflation goes back up. UBS again said that there's a 93% chance of recession right now. And then Ray Dalio, who again is the founder of Bridgewater Associates, the largest hedge fund in the world, has said something worse than a recession is coming. And he's referring to that currency crisis. More than half of the industries in the US right now are shedding workers, which is a very telling sign that has accompanied past recessions. Now, Moody's analyst, chief economist Mark Zandi, this is a great quote. He said, "The economy is on the precipice of recession right now. Not only is the labor market weakening, but consumer spending is flat while construction and manufacturing are shrinking, and the Federal Reserve will have a very hard time reviving growth with inflation still above its target." Inflation is at the highest level now since 2024. It's back on the rise at 2.9%. We have consistently emphasized that a slide in labor demand of this magnitude is a recession warning signal. Firms normally maintain hiring gains through growth downshifts if they perceive that that is transitory, that the jobs are declining. But in episodes when labor demands slide with a growth downshift, it's often a precursor to recession. So, again, just to kind of boil that down into layman's terms, we're seeing that there's less and less jobs being created. Usually, if that was just a temporary shift, people would continue to hire throughout that growth downshift in the GDP. But now they're starting to lay off, they're creating less jobs, and that's pushing us deep into a recession right now. So just to recap that, we have a weak dollar. We have further weakening of the dollar because the Fed is cutting rates, inflation is going back up. We have this recession on the horizon, and the world is pulling back away from the US dollar. And so I just want to invite you all to sit for a minute and think about, what does the future look like for the US dollar if we continue to see this trend take shape? What's the long-term trajectory of the dollar, but also what is the immediacy that we're facing as we walk into a recession with inflation going back up and the Fed cutting rates? And this is called stagflation. So the Fed meeting that was yesterday, just to recap this for you really quick, Jerome Powell came out, he said, unemployment has risen, inflation has risen and stays somewhat elevated, growth of the economy has moderated, so it's slowing down, GDP is slowing down from last year, and there's largely a slowdown in consumer spending. Jobs creation has slowed below the break-even point needed to maintain low unemployment, so we're going to see unemployment continue to go up at this point, not be held down. And then core inflation is up 2.9% over the last year. Tariffs are going to affect that. That's still yet to be seen, and we're really unsure of what the inflation future is going to look like. Businesses are doing very little hiring. The Fed will keep cutting rates even at the expense of higher inflation in 2026, and they don't expect to get back to their 2% target, which is where they want to hold inflation, until 2028. So we're going to be dealing with higher inflation for the next handful of years here, the foreseeable future, as we continue to see the dollar erode. So my big takeaway from that is that there's trouble in the economy and the labor markets. The GDP is slowing, and there's higher inflation. And this is very important. The Fed, again, has this target of 2% for inflation, which means that's what they want every year. They want to devalue our dollars by 2% every year. That's the minimum. That's their goal. And we're well above that. And so if you actually look at the historical data that we've seen over the last handful of decades, that real devaluation of the dollar is actually something about 8%, which means that every year you and I are losing roughly 8% of our purchasing power. And so what do you do with the dollars that you hold on to? And that's why gold and silver becomes so important in this environment, is they're meant to protect and preserve your net worth and become a store of value. I hope that makes sense. So we're covering a lot here, right? We've talked about the overall dollar. We've talked about the Fed meeting, the bond market. Let's just throw in the stock market for a quick minute, because I think that's something that we all pay very close attention to. The stock market right now is what we're all familiar with. It's climbed to new highs. This year it's hit several new all-time highs, but every single measure that we look at that economists use, this is the most overvalued S&P 500 in American history. It's more overvalued than 1929, right before the Great Depression. It's more overvalued than the dot-com bubble, and it's more overvalued than 2008, 2009 with the Great Financial Crisis. By every measure that economists look at, the average stock is trading 530% higher than what the company is actually worth based on its book value. In 1929, that was somewhere between 420 to 523%. This is huge. We're at 530% higher. And additionally, today, the S&P 500 is further above its long-term trend line than at any other time since the late 1920s. And so essentially what that means is there's so much money that have flowed into stocks and created this bubble, these overvaluations. What inherent risk is getting built in there? John Hussman, who is a legendary investor, he has suggested that the current stock market represents the most extreme bubble in history, with, again, values mirroring the extremes of the 1929. So again, this is being called the biggest bubble in American history. Markets are being led by only a handful of companies, and if there's even a slight hiccup in their earnings, or dare I say a recession that hits the economy, those valuations will come crashing back down to earth. And many investment banks are expecting a minimum of 20 to 25% crash in the stock market before the end of 2025. That's the warning that we're getting right now. And so again, I want you to think about this, that every dollar the stock market goes higher, that builds in more and more downside risk. Gold is also hitting new all-time highs along with the stock market. And there's a few reasons for this. There's economic uncertainty, there's inflation, there's devaluation of the dollar. People are crowding into precious metals for safety and protection. And you typically look to gold for preservation, but again, with gold waking up and moving to new highs, and we're sitting about $3,700 an ounce right now, investors are waking up as well and wanting a piece of that. And that's probably a part of the reason why you guys are here. You're seeing the concerns, but you're also seeing that gold and silver are doing so well, and people are starting to take notice. So the good news is you're early. You want to be in the market before everybody wakes up to that. The inflows into precious metals right now are increasing dramatically, and central banks are a big reason for that. Central banks have been buying gold at record levels, okay? The US dollar right now is only 46% of the overall reserves that central banks hold on to. This is the lowest in history. Gold has actually taken the number 2 slot right behind the US dollar. 96% of central banks have said this year that they will be increasing their gold holdings, and they will continue to do so next year. This is, again, the largest number ever in history that we're seeing with central bank buying. And we need to really just pay attention to that. What are we going to do? Are we going to just take guesses into the economy when there's so many uncertainties, or should we just do what the banks are doing and buy gold? If that's where they're running for safety, isn't that what we ought to be looking at? Now, countries and institutions are diversifying their portfolios, which is heavily weighted in the US dollar, but they're dumping those dollars, and what they're adding is actually gold. And so that's a huge notice for us, again, to pay attention to. And I really just want to drive home that gold and silver are very simple. I would imagine this is probably a lot of your first times buying gold and silver, looking at gold and silver, and we typically don't pay attention to precious metals except for once every decade when we see something concerning in the economy, which obviously has been the last 5 or 6 years here. That's all we're seeing is concern and uncertainty. But unless you're really familiar with precious metals, you don't know where to start. But it is actually incredibly simple, and I hope to break that down for you. So gold had its best first half of a year run since 1979. That should tell us something. The performance of gold this year is the best it's been since 1979. And I'll just list the conditions for you in which gold and silver do very well. They're conducive for gold to grow. And you tell me if that sounds like we're in a risky environment for precious metals or a wise investment for precious metals given the current climate. Gold does well in times of inflation, money printing, government debt, geopolitical conflict. We have no shortage of that. Currency devaluation, that's not just happening here in the US, it's happening worldwide. Low interest rates, which is what the Fed is starting to move us into. Economic uncertainty and recession. And based on what I've already kind of walked you through, every single one of those is on the table right now, which is why this environment is so conducive for gold and silver to grow. So this year, gold and silver are outperforming stocks, bonds, real estate, crypto, really every traditional financial investment that you can get into. Gold and silver at the top of that pack, and not just a close race, they're leaps and bounds ahead of every other investment. Gold has hit $3,700 an ounce. This is a brand new all-time high. It's new territory. Gold has actually now surpassed its 1980s high, adjusted for inflation. It's hit something like 31 all-time highs so far this year. Silver, if we kind of adjusted that for its high according to inflation, that would be somewhere around $200 an ounce. we're only sitting at $42 an ounce right now. So silver has been moving. It's up 46% this year, but it's still incredibly undervalued compared to what gold has done. But again, there's no doubt that gold and silver will keep going higher according to every economist and investment bank that's looking into this and writing reports on it. So we're still very early here. And while gold is at new all-time highs, we have UBS, Goldman Sachs, JP Morgan Chase, so again, three of the most prestigious investment banks in the world, all coming out saying that they expect to see gold somewhere around $4,200 to $4,500 an ounce, even by the end of this year if conditions persist. Goldman Sachs has also predicted gold to hit $5,000 an ounce next year, and JP Morgan Chase painting an economy where gold could rise to $6,000 an ounce in 2026. So Yahoo Finance is expecting silver to break somewhere around $100 an ounce by next year as well. The trend for gold and silver is up, and the certainty is high there. Gold is a store of value, right? There's proven history behind it. There's this track record of 6,500 years of recorded history. Gold has always worked, and when it comes to investing, trust is really everything. We want something with a track record. From ancient kings and emperors that were using gold as a store of value to now central banks, it's always been the place that governments have looked. So we, the people, should maybe be doing the same thing. And clients always ask me, how high can gold go? How high is it going to go up? But a better question that I want to posit to you is not how high can gold go, but how much is the dollar going to devalue? And if you leave here with one thing, that's the question that I want repeating in your mind is, where is the US dollar going? And if you know that it's eroding, gold and silver are the answer to that. So you buy gold for both immediacy and long term. And I want to make a distinction between those two, because long term gold is really considered a store of value. It's a hedge against inflation. It's meant to maintain your purchasing power, and it's really meant to safeguard against erosion of net worth. Think of it as protection and a hedge like insurance. So overall, we're concerned about the devaluation of our currency. You go into gold for that. But again, in the short term, if we look at it more like investing, it's somewhere around the 2 to 5 year mark. We want to look at gold as kind of an investment. Again, you compare it to the other investments out there, stocks, bonds, real estate, CDs. And what is gold doing now? It's not just a store of value, but it's actually the highest performing asset on the market right now. So a lot of times people are looking for gold as, again, protection, but then they want to look at it as that investment piece. And again, we're very early to that. It's up over 40% so far this year. Silver's up over 46%. That's a fantastic investment. And those conditions that are causing them to grow are looking to be present for the next handful of years. So if you know how early you really are right now, you would be buying gold and silver hand over fist. The whole world has not yet woken up to what's going on. The panic and the fear stage has not set in. People are just now starting to take notice. And so I want to commend you being here on the webinar, learning about this now, taking the steps to get ahead of what's coming. There's really never been a better time than now to be owning precious metals, from our opinion. Gold again has surpassed its 1980s inflation-adjusted high. Silver would be somewhere around $200 an ounce if it hit its high. And this is why it's so crucial to own precious metals now. And again, what I hope to do is really just simplify that process, how that actually looks to get into gold and silver, and give you the confidence that if you are considering this investment, that we've never seen a better time to invest. And of course, you're with the right company. So I just want to remind you right now, at any point in time during this, before I get into the questions and the process of how to invest in gold, you can call us at 866-607-2447, and we can discuss all of this in more detail with you, as well as your personal situation, get right to the heart of what you're looking for. We have account executives on standby waiting to help, and so feel free to just call us directly, and we'll get right into it. And of course, you can get a replay of the webinar is for whatever else that you miss here. I want you to have that education, but I think jumping on with our account executives, if you're getting that sense of conviction that this is a move you want to make, don't delay, just get right on with them and let's help you out, okay? Now, I'm going to just briefly walk you through what it looks like to invest into gold and silver, what that process would look like with American Hartford. And then I'm going to take a minute and answer some questions that you have, and we can keep going forward here. So there's two ways that we help our clients at American Hartford. If you call us, we can help you with a cash investment where you have funds in the bank or in a brokerage. Anything that's not inside of a qualified retirement account is considered a cash investment. And that would be as simple as us generating a 7-digit client ID. You would do a wire transfer or a check over to American Hartford Gold for the funds that you want to protect. When we get those funds in, we'd sit down with you with one of our senior directors. They would do a full consultation. They'd get to know your investment objectives, your time horizon, your liquidity needs, and we would put together a portfolio based on your scenario and your situation and what's important to you. And we ship that gold and silver right to your door. It's fully insured. We cover the shipping cost. There's no sales tax. You sign for it. There's no liability on you whatsoever until you sign and get that gold and silver in your hands, and then you own it. Now, at any point in time, if you want to sell it back to us, we have a two-way marketplace, and that's really important. It's not just about getting into gold and protecting yourself, but what happens when you want to get back into the dollar. At some point, when the economy settles out, when things cool down, how are you going to get back into cash to be able to use your money? We don't want you having to go look for a place to sell your gold and silver. So at American Hartford Gold, we've created a two-way marketplace where anytime you want to liquidate, you call us up. We'll put together a buyback ticket for the metals that you want to sell. If it's at home, we'll send FedEx to your home with a packing material and a shipping label. You box it up, they'll bring it to us, and we wire funds into your account. So gold and silver are incredibly liquid. And what we talk to clients about is if you just have cash, again, sitting off to the side that's being eroded by this inflation, 11% so far this year, why would you leave that in cash as opposed to getting into gold and silver? And one of the hangups that people have is they just don't realize how liquid precious metals can be. So whenever you want to get back into the dollar, it's incredibly simple with us. That's our whole job, is to make it as easy as possible for you to get out of the dollar into gold and silver, and then of course back into the dollar when you're ready. So that's the cash side. The other side is retirement accounts. So if you have an old 401k or an IRA or any employer plan, you can put physical, tangible gold and silver into that account. Even if it's a current employer account, 401k, 457, pension plan, whatever it may be, if you're over 59 and a half, you can oftentimes move the funds and put gold and silver in there. Tax-free and penalty-free to do that. If you're not over 59 and a half, usually it has to be a previous employer account. But again, if you're unsure of that, call us up and we'll discuss those details with you and we'll check for you. We have an entire back office dedicated to helping you through this process and doing all the heavy lifting. But essentially what this looks like is we open up what's called a self-directed IRA. It's the type of account that allows you to hold on to physical, tangible assets in your retirement rather than just paper assets like stocks, bonds, equities, and the dollar. So we open up this new account for you. It takes us 5 minutes with a quick application. We send it to you for a signature via DocuSign. Once we get that built out, we'll schedule a call where we do a custodial call with your current custodian, help you liquidate the funds that you want to move. We'll get transfer forms submitted. We as a company will keep our thumb on the process the entire time until your account funds. Now, once it funds, we do a full consultation. Again, we'll help you select the metals that you want. We'll build out a portfolio and we'll ship that gold and silver now to a private depository. And so this is a third-party vault. It's outside of the banking system. You own that gold and silver. You can access it any time you like, but it does have to be stored for you safely and securely at this private third-party vault while it stays in that retirement structure. Again, it's tax-free and penalty-free to move all your funds over, but to keep it in that structure, it has to be stored for you. These are incredibly secure buildings. They're fully insured, backed by Lloyd's of London, up to $1 billion per account holder. They're tried and true. They've been around for decades. There's no risk there as far as, a lot of people just don't trust having their gold stored. But if you're going to protect a retirement account, this is the way to do it. And then again, at any point in time, if you need access to that money, if you need to liquidate, we have that buyback commitment to you. So it's incredibly simple whether you're doing cash or retirement accounts. Clients often ask, which way should I go? And our answer typically is, well, where's your concern? If you have cash off the side that's not being put to work and it's being eroded, or it's in the stock market and you're concerned about where the stock market's headed, why not get that protected? But then oftentimes Clients have the majority of the net worth tied up in old 401ks or IRAs, and they're waiting for retirement, but all that risk of the market is tied up in those accounts, everything you've worked your entire life to build up. So maybe it's time to look at that and get some protection in the retirement account as well. And so many clients end up doing a little bit of both. And again, if you have questions about that, give us a call right now and we can discuss your situation, talk some strategy with you, and help you make that move. So if you are ready to get started, again, with either cash or retirement accounts or both, or you just have questions, call us right now at 866-607-2447, and we can discuss the specifics of your situation and get you taken care of. Now, I want to drive home why American Hartford Gold, and then I'm going to take some questions for you. But you're here with us today. We certainly appreciate that. Maybe you found us because you've been watching us for a while, or maybe you just did a Google search and said, who's a good gold company out there? What I want to drive to you is that American Hartford Gold is the largest precious metals dealer in the U.S. We've shipped over $3.5 billion in precious metals over the last couple of years to clients just like you and I. We've been in business for over a decade, helping countless Americans protect their retirement accounts and their savings. And our whole job, again, is to make this very simple and easy. And I would encourage all of you to again, call in and get some information from us, but also visit our website, our About Us page. You're going to see this great welcome video. It shows you behind the scenes on who we are. You can see our president, our CEO, many of our directors and account executives, our shipping department. You really get a good sense of the company that you're partnering with. And there's also an email we can send out to you with links to our reviews, thousands of positive reviews online, A+ rating with the Better Business Bureau. Again, servicing countless clients and doing a very good job and carving out this space in the market where we really have the best reputation in the industry. And if you're going to invest your life savings, you want to go with the name brand in gold and silver. Inc. 5000 magazine, which is one of the most prestigious business publications in the world. They look at the fastest growing companies in America. They've given us accolades the last 5 years in a row. And again, we have a full service team dedicated to making this a very smooth, easy transition for you, both into precious metals and out of precious metals. We'll be there to hold your hand the entire process. You're never going to be alone in that. You can lean on us for that, help, the structure, getting it set up, and of course, any questions you have as you go forward. So I really just want to impress upon you, if you're going to take a step to protect your investments, it's new, you're concerned, you've never done it before, you want to go with the name brand in gold and silver, and that's what we have worked so hard to be over the last decade and have done a very good job at. So call us today, we'll get into that. We also have this promotion, and I'm going to leave this for our account executives to talk to you about when you call in, but there's free silver and a potential free safe for your first investment. For every $50,000 increment that you invest with American Hartford, we will give you $500 of free silver or a free safe, and that's up to $20,000. So there's great promotions that we're running from time to time. Right now, it's the free silver and the free safe. If you want to explore that further, call us again, and we'll discuss that with you and make sure that we can get you set up for some perks and get you well taken care of. That's just our thank you for taking the first steps to protect your accounts with American Hartford Gold. So I hope that gives you guys a good sense of how it works. I want to just pause for a minute and take some questions as we go into the close of the webinar. And I'm going to have some filtered over to me. We'll get to all that. And then I'll just give you a quick conclusion on, again, what we've seen in the economy, where things are headed, and hopefully give you that certainty to take those steps. So I want to thank you guys for bearing with me. I hope this has been educational so far, and then I'd love to hear your questions that you have. We have quite a few coming in. This is great. So Sebi says, I often see infomercials on TV about buying gold and precious metals. Is it possible for me to buy metals outside of my 401k? So absolutely. If you just have some cash, you want to do a purchase where gold and silver gets shipped to your door, Sebi, that's what I talked about. It's very straightforward. Call us right now. We'll talk to you about how much you want to do, whether you qualify for promotions, and we'll get you gold and silver shipped right to your home. We work with all the major government mints. We have thousands of products we can get you into. Our job, again, is to simplify that down, take all the guesswork out of it, and not have it be complicated. Shan says, is it too late to invest in gold since the price is too high? Let me find your question one more time, Shan, sorry. Or wait till it drops down. So we kind of talked about where gold is headed and what the general consensus is for investment banks, economists, where they're predicting gold and silver to go. There's really nothing that would cause gold to pull back dramatically in this environment that we can see, especially as the Fed goes to cut. That gold and silver will keep going up against that. If we devalue our dollar, it takes you would have been able to get in around $2,800 an ounce. Now it's at $3,700. You're missing that growth. So don't try and time it. If you're concerned about where the dollar and the economy are headed, just get into precious metals so that you can get yourself protected and put it out of your mind. That's my recommendation. James says, what do you see the value in silver and gold going since we're losing the petrodollar? Yeah, same thing. I mean, the dollar is everything. The strength of the dollar is what's driven the entire world. As we lose that, the currency goes into a crisis. Confidence in the U.S. system starts to erode. Foreign money starts to pull out of our stock market, our bond market, out of the dollar in general. All of those things go down. And the alternative to that is gold and silver. So money flows into precious metals. We've already seen this on a dramatic scale. But again, it's just the tip of the iceberg. So the outlook for gold and silver is stronger now than it probably has ever been. And I want to commend you guys that you're early on this. This is the right time to be looking at gold and silver. You've missed some growth. You haven't missed even a fraction of where we're expected to head. Vern says, gold and silver, is it the way to go? It's better than stock market with exactly what this gentleman, oh, okay, so just giving some validation. Thank you, Vern. I see silver going to $80 an ounce by March 1st. Yeah, possibly. You have economists that are saying even $70, $60 an ounce by the end of the year. We'll see, but there's such a trajectory for where gold and silver are headed right now. It's a great outlook. Rob says, what is the better investment gold-wise, gold coins or bullion? Great question, Rob. My recommendation to you is call that number and talk to one of our account executives because it's different for everybody. What I will say is the vast majority of the retail market for you and I is going to be coins. That's really what most people lean on, but we'll simplify that for you and give you some direction. Robert says, differentiate by security and access the use of IRAs versus physical gold. There's really no difference. You've got your money in stocks, bonds, equities over at a major bank, major institution, or you can move it into precious metals and have it outside of that banking system. Again, 2008, 2009, 400 banks failed. Some of the bigger, too big to fail banks went down. People's accounts were wiped out. You're fully exposed to that volatility and the risk. But of course, that's what we're familiar with. That's what we're used to. Gold and silver is really no different in the fact that you're still in your retirement account. It's just, what are you invested in? Now, the one thing I would tell you is moving over into precious metals, you have full insurance on your account. You don't get that with traditional investments or retirement accounts. You can have the FDIC in a bank account up to $250,000 per account. With gold and silver, you're insured up to $1 billion. So it's really one of the safer places you can be, especially given the current climate, especially with what's going on with the dollar and with the banking system right now. James says, do you think Congress is going to revalue the price of gold to match the market price? So what James is referring to here, there's money, there's gold and silver on the balance sheet of our central bank still at $42 an ounce, roughly. If the Fed revalues that to the current price, $3,700, what that does is it allows them to create more money. It allows them to print more. It allows them to borrow more because it revalues the holdings of the gold that they have and puts that way up. So what does that do to the gold and silver that you and I have? It makes it more desirable. It makes the Fed print more money, which devalues the dollar further, which drives gold and silver up higher. Do I think that they're going to do that? They've certainly talked about it. We don't know what they're going to do there, but it's something to keep our eye on. And it's only a net benefit to where gold and silver should head. There's no negatives. Even if they don't do it, gold and silver are already performing. Anya says, is there a certain threshold to purchase metals? So great question, Anya. For a retirement account, the minimum is just $10,000. We can help you from $10,000 to $25 million. It doesn't matter to us. It's important that we actually protect what you want to get out of the market into precious metals. On the cash side, the minimum's $5,000. Of course, we'll do anything from $5,000 up. So any funds that you have that you want to protect, it's worth getting protected. Call the number in the message chat. We'll discuss your situation and talk to you about how much you're looking to do. Shan again says, do we pay shipping fees while shipping it back to you for selling? In many cases, you will. If it's a cash investment, you have the gold and silver on hand. We'll put insurance on it. We'll line up that delivery. We'll give you this packing material. You typically will pay shipping fees to get it back to us. Some scenarios we may have promotions where you don't. Again, I would encourage you to call our line to kind of discuss that further. If it's in a retirement account, it's usually a lot easier for us to liquidate that way as well, and oftentimes there's no shipping fees on that. Just kind of depends on what's going on. Dorsa says, what combination of silver and gold is good for investment? A portion of each. So we lean on gold for preservation and protection typically. We lean on silver for growth, especially in this environment. Most clients will do a 60-40 split one way or the other. It's just nice to have exposure both ways. If you're looking for more preservation, you go heavier gold. If you're looking for more growth, you go heavier silver. And at the end of the day, there's no right or wrong way to build that out, but our talented senior directors will dig into your scenario and build out a portfolio that's really right for what you're looking at. But certainly, exposure to both is very good. Jay Marvin says, if a person wants long-term protection to pass along in a trust, what ratio of investments coined set to gold bullion would you suggest now that gold is appreciating so fast? Great question, Marvin. I'm going to leave that one for our directors. It sounds like you have something specific in mind. Call the number. Talk to our account executives and our senior directors about your scenario, and they'll build out a portfolio that's really going to get you the preservation that you're looking for. Certainly, if you're looking to pass this long term down the road, you want something that you can pass across the table. You want that privacy. That's something they can talk to you about. Rick says, is it true that inflation, high or low, doesn't affect the silver market as much as the gold market because silver is more based on industrial demand? Yeah, inflation is going to drive gold significantly. Silver will follow suit to what gold does. Of course, inflation affects silver, but the vast majority of usage on silver is industry. It's tremendously undervalued compared to gold. There's huge demand industrially on silver, and we can't even keep up with that demand. So the driver of the silver price will typically be what gold is doing. That's going to move it first, and then what's going on in industry and the demand there. That's going to be the catalyst for silver to grow. And then James says, when you buy back gold you've sold to a client, do you buy it back at current market value or at the value at the time you sold it to the client? Of course, James, we buy back at the current market value. So that's the whole point. You get in today's price, gold and silver go up and you want to sell it, you're going to make that profit. That's important. Carl says, what are your fees? Can you cover part of this? So in a retirement account, when you have gold and silver, it's $250 a year or $225 per year for storage and custodial fees combined. That covers everything. If you're going to be in a non-segregated account, which means your gold and silver is in a room with other people's precious metals, it's not being lent out, loaned out, leveraged, it's just $225 a year. If you want to have your gold and silver in a room all by itself, it's $275 a year. That covers everything. As far as the purchasing of the metals, again, call our account executives, call our senior directors, and they'll talk to you about it. There's thousands of products. They all have a different market value. We'll help explain that in more detail. Last question here, and then I'm going to wrap this up because we are going a little bit long here, guys. I appreciate all the questions. These are great. It's good feedback for us as well. Is the insurance payout for stored assets at the current spot price or the original purchase price? So, Sam, if there was ever anything to happen with a retirement account, the insurance is going to cover the current value of the metals. So I hope that answers your questions, guys. Again, if you have more, please call that number and we can just get right into it with you. That's really important. And then I just want to give you a quick recap of everything we've talked about. So let me get to the end of my list here just to make sure that I've covered everything. We've talked about where gold is headed. I hope I've really driven that forward, that we're very early on. This is the perfect environment and climate for people to be buying gold and silver. Silver, compared to gold, again, is tremendously undervalued. We just broke a 15-year high, but we're nowhere near the previous all-time high on silver. There's a lot of runway to grow. And what you usually see in every bull market is gold will move first, and then silver will move second, and it's going to make a significantly greater move than what gold does. And it looks to be that we're right there on the precipice of silver breaking out and this being the year that silver really gets its legs. So if you feel that gold has grown too much, if you're a little concerned about getting it at the high, again, I would want to dissuade you from having that concern. I think it's unfounded. We have a tremendous runway for where gold is headed, but silver is very, very undervalued compared to gold. And if you feel that gold is too risky for you at the levels that it's at, look to silver. You couldn't be getting into silver at a better time than right now. There's a kind of a natural ratio between silver and gold of 16 to 1. We're at 90 to 1 right now. So there's a tremendous amount of movement for silver to grow and catch up to where it ought to be. And what I want to leave you with here, we look at the last year. Gold is up over 48%. Silver's up over 46%. The S&P 500 is up about 12%. The NASDAQ is up about 8%. But even since 2000, if we look all the way back to 2000, gold is up over 1,000%. Silver's up over 500%. The S&P 500 has done about 250%, and the NASDAQ has done somewhere around 380%. So gold and silver are far outperforming traditional investments. And it's funny that people tend to not think about precious metals. It's just out of sight, out of mind. And yet this asset class has been just quietly outperforming every other investment you can make out there, even the ones that we're most comfortable with, like the S&P 500 or the NASDAQ. So ask yourself, where do you want to be? Is it stocks? Is it the dollar with all the risk that we see getting built into those markets right now? Or is it precious metals? Wise investing is just risk management, okay? Gold is, again, far outperforming traditional markets, and there seems to be nothing but risk and uncertainty and questions on the horizon for where's the dollar headed, what's going on with the stock market, what is happening with the bond market and treasuries. The dollar is plummeting. The US is moving into a recession. Countries are moving out of bonds and US treasuries and into gold and silver. Follow the central banks. Do what they're doing. There's a reason that all major financial institutions right now are leaning on precious metals in this season, and so should you. Central banks, banks, billionaires, and history are telling us that gold is the place to be right now. The bond market, the equity market, the currency market, they're all telling us that gold is a place to be right now as well. Those are far too volatile for most people's retirement accounts when you've worked your entire life to build up this nest egg, and now you're seeing the volatility approach it. America imported more than 600 tons of gold in the first 2 months of 2025. Okay, central banks bought more gold this year than at any other point in history. Banks haven't moved this aggressively on gold since the 1950s. And President Trump tweeted at the earlier start of the year, he said, the golden rule, he who has the gold makes the rules. It shows us that this country is starting to focus back on gold. Secretary of Treasury Scott Bessent also came out and he said, gold is my #1 holding in my portfolio. I think that every American should have it. So investment banks are saying what central banks are doing, or investment banks are saying do what central banks are doing, buy gold. And if the policymakers that are running our country, that are dictating the future of our markets, are telling us to buy gold and dropping these hints, that's really something that I want you to pay attention to. So I really hope that I've driven that home for you. There's never been a better time to buy gold and silver. You're in the right spot with the right company. If you have concerns about what you're seeing, follow that intuition. Let's get you protected. Call us today at 866-607-2447. And we'll talk to you about how putting precious metals into your accounts can really get you that hedge and that protection and that preservation that you're looking for, as well as getting you the investment that you're looking for this year. And again, I just want to thank you all for being with us. I'm Machi Block with American Hartford Gold, Senior Director. Call us today and let's get you taken care of. Thank you for joining us, and I'll see you on the next one. Hopefully I talk to you on the phones.